Two all-star stock watchers join us to talk about Apple's fascinating state of affairs, plus plenty more on Nvidia, Amazon, Meta, and others. That's coming up right after this. We're joined today by Stephanie Link, the Chief Investment Strategist and Portfolio Manager at Hightower Advisors. Stephanie, welcome.
Thanks for having me, Alex.
Great to have you. And Dan Ives is also here. He's the Managing Director of Equity Research at Wedbush Securities. Dan, great to see you. Thanks for coming back on the show.
Awesome.
Yes. And great to see you both repeat guests. And we're going to take the show on the road in Savannah at the Hightower Conference, Stephanie. Looking forward to that. That's going to be on Thursday, right?
Yeah, Wednesday and Thursday. And we have over 250 advisor teams. And we're going to be doing lots of videos with both Dan and you, hopefully, awesome. To talk to and show how smart you are to everyone in the technology world.
Great. So we're going to get into the state of big tech, especially Apple. I have so many questions about Apple for both of you because it's like one of the most puzzling companies to me. Apple is up 42% since April, 42%. And it's like a $3.5 trillion company. And so I'm like, okay, well, what is going to make Apple so special? And I'm looking at the bets. Apple Intelligence, to me, I don't want to say it's a dud, but it really is not that impressive objectively, looking at like the advance in technology. The Vision Pro is nearing dud territory. I don't know, maybe it has a long-term path, but I don't see it as that impressive. And then, of course, the company has had slowdowns in China. So why are the headlines and the action in the stock so different? Dan, what do you think?
Look, Al, me and you've talked about this one for years, right? And I know we've differed in our views. I mean, my fundamental thesis, it's really threefold. One, there's 300 million iPhones that haven't upgraded in 4 years. So regardless of what you want to say about Apple Intelligence, if it's going to be rolled out in October, November, January, February, for this fiscal year, this will, unless some black swan event happens, be the strongest iPhone unit year ever, historically. So I think over 240 million in terms of units. The second is that it's our view, regardless of timing, next 12, 18 months, 20% of the world ultimately is going to access AI, especially as more developers build apps through an Apple device. So just as Nvidia and Jensen control enterprise AI along with Microsoft, my view is from a consumer AI perspective, the monetization here, we think it'll be ultimately an incremental 10, 15 billion per year of services. And the third is, look, I think and Stephanie will talk about it from evaluation, and I just continue to view this as more and more, it's essentially a services company, a software services multiple, and that services piece that at one point was valued 500 billion, I think it's going to be closer to 2 trillion in terms of the valuation as that reaches 125, right. 150 billion per year. That at the core is our thesis.
Okay, one quick follow-up too, then we're going to go to Stephanie. But, there have been all these people with old iPhones that are poised to upgrade. And it seems like that pool has not upgraded as fast as everybody's expected. And that's why the service has become so important. But didn't Apple have 5 of 6 or 4 or 5 quarters of revenue deceleration? And the company is just it is an iPhone company. It's reliant on the iPhone. People are hanging on to them longer, which is okay, great. Company's making a good product. We'll celebrate that. But the services revenue hasn't exactly made up for the fact that people are hanging on to these phones for so long.
Yeah, it's a great point. What I'd say is that first off, they've gained about 300 bips of market share in China in the last 2 years. So despite all the sort of doomsday scenario, they've gained about 300 bips of market share from essentially Android users or Huawei to Apple. Clearly over the last year, that's been a decline. But Alex, if you look at comps, the next year, China's going to be up 15, 20%. And that's why, the bears, when they come out of hibernation mode with iPhone mathematical gymnastics trying to scare people, the reason the stock's not doing anything, because institutional investors are reading through it and seeing ultimately numbers probably have to come up 10, 15% for the year.
Right. Are you calling me one of the bears doing the gymnastics, or?
Oh, I don't think you're a bear. I think there's many that have been bearish on this for the last 2 trillion.
Yes.
And every iPhone cycle they come out with I mean, we've been to Asia what 2 times in the last 8 weeks.
Ugh.
So the point is, I feel pretty good with our supply chain checks,
Okay.
and that's why I always say like it's hard for the bears to find AI in their spreadsheets.
Right. I'm going to talk about China in a bit, but let's go to Stephanie. I mean, Stephanie, is it not puzzling at all to you that we have, like, again, these kind of bad headlines, but unbelievable growth?
Well, Alex, I think it's all about positioning. First and foremost, in the S&P 500, this is about a 6.4% weighting. It's the big weighting, right? If you're going to own the weighting, you have to have 6% of your portfolio in this thing. And I would say the majority of people, especially in the spring, were way underweight. By the way, myself included. Totally myself included. I've had like a 1% weighting in the beginning of the year. And then all of a sudden, like April and May came, and it was gloom and doom and downgrades, and numbers were getting cut, and there was no line of sight of any growth of any kind for Apple in the springtime. And that's actually when I thought, okay, I got to start adding to this position because it was people are so negative and so offside. And maybe they had a reason to be somewhat cautious because the prior 4 quarters were really nothing to be so excited about. It was a transition 4 quarters. So I added to it because I kind of felt like I wanted to be the other side. And I wanted to be the contrarian, and everybody was on the other side of the boat. So that was number one. And I totally believed at the time that AI would be certainly a positive. Would it be the super cycle? Is 16 going to be the super cycle? I'm still not convinced of it, but it would be the beginning of a change of tone. So that was number one. Number two, as Dan mentioned, you've got 300 million people around this world that haven't upgraded an iPhone in 4 years. So, I mean, my goodness, even if you took half of that number, that is still more than what people at the time in the spring were forecasting, because they really did cut numbers. And at the same time, I totally believe what Dan said in terms of China. Oh my goodness, it was the sentiment was terrible. China was never going to grow an iPhone again, and they were losing all kinds of market share. And so I thought the setup was pretty good. In the meantime, during all of that kind of malaise over the prior 4 quarters, gross margins and operating margins rose in every single region except China. This company has done a masterful job. We know the free cash flow and the buyback that they had in place back in the spring.
Right. That's
and
all
so I
services,
like the
right?
setup. Fast forward to today, we're up 37% since May, since when I was adding to it. And that's a heck of a move. That's a
Right.
heck of a move. And everybody now has gone the other way of like iPhone 16 is going to be the revolutionary phone. I'm not quite sure. I think that maybe 17 and 18, I feel really good about those phones. I'm not so sure that 16 is going to be the blowaway, but the expectations are still kind of muted. But I'm going the other way, and I've been taking some profits in it only because when I have Apple now trading at 35 times forward estimates with a 37% rally, I think that there are other names out there to be more excited about. And in fact, I know we're going to get there, but Amazon is actually cheaper than Apple at this point in time and has majorly lagged. So I'm kind of looking for where is a little bit of the offset. Now, long term, services I do think is going to be a home run. I think AI is going to be an absolute home run for the apps business. So I think you just have to be patient. But I don't know if you necessarily need to be overweight this stock relative to the benchmark. At this, just given the run that it's had, and maybe higher, elevated, more now, if it comes back, I might add some of it back. But I think I feel pretty good with a slight underweight in the name for now.
Right. But as soon as your investment got, maybe not as soon as, but when your investment in Apple did really well and it started making up more than the typical percent in the S&P 500, you sold off. I mean, so you clearly think that there's a ceiling to the way that this company can perform.
So I was a 1% position in May.
Mhm.
I added 500 basis points to it in May. It rallied. It got to be a 9% position in my portfolio. Now, as a portfolio manager with 40 stocks, that's, in my mind, risky. That's not a good thing to have one name be that big in your portfolio. So that was number one. So I took it down to a market weight, and then we kind of continued to rally. And again, it's like, it feels a little euphoric at this point to me. So that's why I took it down. So yeah, I mean, am I as excited as I was back in May when everybody hated it? No. But do I think there's a disaster brewing? Absolutely not. I will say
Right.
though, there is this one thing, and I'd love for you guys to chime in. There's been a couple of changes on the management, on the margin, right? The chief people officer and the chief financial officer. It's all normal. I don't think that there's anything wrong with that. But I have found like when you have new management in place, it just takes a couple quarters to get your groove back or get your groove on. I don't know
Yeah.
what you guys think.
Well, it's interesting. I mean, you could think about the Apple turnover and then you think about the Tesla turnover, and you're just like, oh, Apple is a beacon of stability. I mean, I don't know if losing the chief people officer and some folks on the finance side is going to make all that big of a difference inside Apple, which seems to just kind of chug along in its own institutional way, because it really is an institution now versus like, a traditional company that will just like kind of bounce up and down with volatility.
Yeah, I mean, I would just add, I think they have such strong bench. Even when they bring people on, they've been there for 15, 17 years. So I don't think there's much disruption, but yeah, if you compare it to Tesla, it gets the HR sort of world award.
That's right. So have either of you used Apple Intelligence? Are either of you impressed with it?
Dan, you go
Stephanie?
ahead because you're the expert. I just play
Yeah,
around. I just play around with it because I'm a novice at it, but I think it's pretty cool.
I'm actually, I mean, I'm on an iPhone 16 now. I think, look, to me, I mean, I've obviously played around with it, but I think the big thing when 18.1 hits, right? I mean, I think the best is ahead of us as these features get rolled out. And I think, especially as developers build more and more apps on top of Apple Intelligence, I think that's really the game changer in my view.
So to that point, I think if you hear what both Dan and I are saying, it's what is your timeline?
Right.
And as a portfolio manager, I'm mark to market every day. And I
Mhm.
got between now and the end of the year to outperform. And could it outperform the market? Certainly. But I just think it's already outperformed so much that there might be other quote unquote surprise stories, positive surprise stories that maybe are less appreciated. But um if we talk in a year from now, there's no question in my mind I will be bigger in Apple because I think we're closer to the time frame where we're going to see a real inflection. I'm not
Let
sure
me
we
just
get it next quarter. That's it.
put this out there. Are people buying the Apple stock because of Apple Intelligence? Because if they are, I don't know. I think that's a mistake because it's not as good as advertised. And does the company end up with some sort of blowback because the stock has run up 42% in the last 6 months on the basis of this intelligence surge?
I mean, I think that people got very jazzed up on AI. Remember their analyst day and that whole thing. I mean, everybody got really bowled up, and off of a very low expectation and off of a much lower valuation. I think the stock got as low as 26 times forward estimates. And today we're at 35 times forward estimates. So I think the risk reward headed into the analyst day and learning more about AI and all of that set it up pretty well. That was your catalyst short term. I think it's not hard to get bullish on the 300 million folks in this world that haven't upgraded in 4 years, so that you get a shot at that. At the very least, you get easy comparisons. So China's going to look better. Oh, by the way, China just put in place the best stimulus since COVID. So maybe
Mhm.
you get some sort of resurgence in their consumer because that's been kind of dead on arrival since they reopened COVID. And so I don't think it's hard to see why people have gotten more positive. But again, I think it's a lot about positioning and where it is in a weighting perspective from a portfolio management point of view.
But Dan, is it we've talked about this like in this conversation, and let's just kind of put a point on it. Is it Apple Intelligence, or is it just the fact that like Apple's poised for an upgrade cycle? Because maybe the headline is that it's Apple Intelligence, but the upgrade cycle might be the thing
I think
driving this.
that's always been our contention, right? Like in other
Mhm.
words, like a lot of people, you know, we hear so much negativity, like, oh, you're wrong. I'm like, look, this upgrade cycle in itself, without AI, the stock's going to work.
Yeah.
the AI piece is ultimately the start of how most consumers in the world are going to eventually interact with AI. And I think, look, WWDC, me and you were there together, right? Like,
Right.
stocks 190. Investors like, oh, this is so disappointing. Think about it, that's in June. And I remember like we would talk, right? Like our whole view is like Apple basically said, we now will be the castle for AI. And if you want access to it, you gotta come through Apple Intelligence. Clearly OpenAI, I eventually think Meta, Google are gonna have to make the same move. I think, Alex, in my opinion, I think that's more
Right.
the call.
I hear what you're saying. I'm not fully buying it, but I think that we could debate it forever. And we won't really know until this stuff starts to you're right, get into the hands of
And you have great
developers.
view. And you have great, every time like we talk, you'll say things where I'm like, that's, no, because I think it's very important. A name like this, you always want to you want to hear different points of views. I think a lot of times that's sometimes people's biggest downfall, right? You want to understand like both sides of it.
Right. I could be wrong. So let's see. But let's talk about, I'm just going to, keep on this line of questioning because we've talked about China a couple times in this conversation, and Apple's had like quite a decline in China in terms of revenue there. And China makes up 20% of Apple's revenue. So the numbers came in and they looked quite good for the first 3 weeks of the iPhone 16. The iPhone 16, according to Counterpoint Research, is selling 20% more than the last cycle of the last iPhone 15. And that's great. It looks like Apple is going to be reversing this trend. But then you look at the total sales of Apple, and Counterpoint says that Apple has still dropped 2% in China because the older models are not selling as well because Huawei phones are starting to take that share. So, Dan, I've heard you say that the state-of-the-art Huawei phones are as good as an iPhone 14, and that sort of computes, right? Because if you're, deciding between a Huawei and an older iPhone, it seems like people in China are going with the Huawei, which is hurting Apple's total sales. What do we think about that?
Yeah, I mean, look, we've seen that share shift over the last year, but it goes back to the last few years. They've gained 300 bips of market share. They could give back 100 bips. But if you look, the biggest opportunity is you have 100 million iPhones in China that are in a window of an upgrade opportunity. And then I think the big X variable, does Baidu and Apple strike a deal where Baidu becomes ultimately the AI partner? If you said to me the biggest catalyst that could happen on the name, it's that.
Okay.
See, I actually think a big opportunity for Apple is India. I mean, we can worry all you want about China. I get it. I understand it's a big part of their business.
Yep.
But, Tim Cook makes one iPhone for every 7 in India. And his goal is to get from one iPhone to every 4 in India. And they have 1.46 billion people. And 40% of those people are 25 years old and younger. Who's your iPhone buyer? 25 years or younger, maybe.
Yep.
But the point of it is the consumer is going to double between now and 2030. And, we can talk about other things. I know we want to talk about technology in general, but I got to say, like, Prime Minister Modi is pro-growth in every way, and he is pro-consumer in every way. And so to me, you have on the margin companies that are leaving China and going elsewhere. That's part of this whole onshoring, reshoring thing that everyone's talking about now. They weren't talking about it a year ago, but that's what whenever you talk to these companies, they'll tell you that they don't want to be in China as much. They don't want to be as dependent on China. They want to be more diversified. And so I think when Tim Cook goes over to India, oh, by the way, once a month, like, that's pretty cool. And I think that that's where your opportunity is. It's not going to be next year. It's not. So we have to think more like 3 to 5 years down the road. But to think of that many people in a country, they're going to be the 3rd largest country in the world by 2030. So I think they want to have a piece of that pie for sure.
Yeah, that's an excellent point. And this idea of companies hedging away from China. I mean, one of the questions I had written down before we hopped on is Apple Intelligence ever going to be available in China? Because China reviews very closely what AI products roll out, and maybe not. By the way, maybe it will never be available in Europe because of European regulation.
I mean, the way Europe's going. I mean, you're gonna have every country in the world's gonna be ahead of Europe when it comes
Right.
to AI.
Yeah. So
Scare their own
yeah,
shadow. Yeah.
but it is also one of those things that computing phones are going to become more important. We're not in the AI world right now. Phones are going to be important, and as more of the world becomes, comes online and decides that it wants the state of the art phones, it's good news for the state of the art phone maker to have
Yeah.
massive, effectively yet to be saturated markets like India that they can grow in.
And it's funny, Alex, I think when I think of AI and how powerful it is, it makes me actually even more bullish on cybersecurity. I mean, I think that those are your two themes. You guys talk to CTOs more than I do, but I talk to my own company CTO, and they only have a budget, a finite budget, and they actually are spending in two places. It's AI because they have no idea what it means for their business, and it's cyber because they can't wake up one day and lose their business. And so you're going to see double-digit growth in both AI and in cyber. I hope
Mhm.
somebody gets it right in cyber because
Yeah.
so far you have way too many vendors and no one's talking to each other, and you got cybersecurity companies getting cyber attacks in and of itself. So I actually think that people talk about AI as, this whole, it's a huge total addressable market. It is, but cybersecurity is just as big and if not bigger because of AI. And so I think that's another area, another theme that should be owned within the next decade or so.
Yeah, now just on that point, and I know Stephanie, like huge fan of CrowdStrike and other, and like we've talked, I think like Palo Alto, Zscaler. I think the other thing that's starting to happen, we've seen it happen over the last few months based on all of our checks in cyber. You're now starting to see as more and more workloads move to the cloud, more and more of these LLMs, even on the experimental side, you got to protect it. AI is going to be a direct beneficiary for cyber. Call it second, third derivative.
Yeah.
That's just going to add CyberArk, Palo, Zscaler, CrowdStrike, Okta, others.
And I think you're going to also see massive consolidation because, as what I mentioned, like was for such a long time, CTOs wanted to have a variety of different vendors because they didn't want to be captive to one vendor. But the problem is none of the vendors talk to each other. And so I think you're going to see massive consolidation of like the big five get even bigger and bigger over time because they need to
Mhm.
offer more services and products to their customers that do talk to each other. And so
Yeah.
I do, so all the names you mentioned, yep, and I am a CrowdStrike fan. I have been a Fortinet fan, was wrong on that one. But I do think that is a theme that it's on the kind of the back end of the AI excitement. And
Well, I will say,
in a sad kind of way,
yeah,
obviously.
I will say that I'm working with a company right now that's taken some of my podcast episodes and has effectively cloned my voice so it can read, like narrate some of my newsletter articles.
Oh my God.
And that's a good use. I mean, we have a deal. There's a, we it's consensual, right? But like, there's a negative side
Wow.
of that, which is that, what if a company, I don't even want to speak this into the universe, but what if I should speak to my family about this right now? A company takes my episodes, clones my voice, and like calls, one of my relatives panicked on the side, saying I'm on the side of the road and I need you to send me money right now. It could happen. So
Yeah.
there's a negative, and that's why I think cybersecurity becomes important. But I really shouldn't give
Yeah,
these
but Alex,
folks this idea.
if all of a sudden I heard your voice and it wasn't a 516 area code, I'd hang
That's
up.
right. I know they'd have to spoof Long Island. So thank you for sharing
I
that
know. I
piece
mean,
of data, Dan.
it's about 516, right? So the
That's
point,
true.
if it's not 516, not Alex. So let's just be
Yeah,
clear.
let's do
Yeah.
it. So scammers, stay away from the Long Island area code because I'll find you, and there'll be a price to pay. Last thing about Apple, because how could we have this conversation and not mention it? What happens to Apple if Donald Trump is elected? Because he is going to start a trade war with China, and maybe over time this India thing is going to be fine, but they still need that 20% of revenue coming in from China. What do you think, Stephanie?
Wow, I think it's not going to just be Apple, unfortunately. I think the initial knee-jerk reaction will be sell Apple, sell semiconductors, and in spades, because they've all done so well over the last several years. even with the President Biden's tariffs, because we know that he kept a lot of tariffs on. But you listen to what Trump is saying, and he's talking about doubling and tripling the tariffs over there. So, and it's not going to just be technology. I mean, I think one of the reasons why today, and you guys focus a lot on tech, I focus on a lot of the market in general. I don't know if you saw, but like consumer discretion got hit so hard today because of that. All of a sudden, if Trump gets in, how are these companies going to get goods? And it's going to be more expensive. It's going to be across the board, probably for a lot of consumer companies. And that is really Apple at its true core. It is a consumer company. So it will get hit. Maybe that's your opportunity. That's why I say, when everybody goes from one side of the boat to the other and the stock rallies, it's not bad to take some off the table. Again, from an active portfolio management basis. But if you're a long-term holder, you're going to survive it. Maybe the Trump tariffs are more of just kind of like a threat and a bargaining chip. I don't know. He seems to be pretty serious about it, but the level we just won't know. But I think that is that certainly was starting to creep into the marketplace because it will not be good news.
Right, Dan, I want you to weigh in on that. And then also there's this notion that the stock market tends to accelerate and do quite well after the presidential election, no matter who wins, because this area, these months of uncertainty, that you finally have certainty. The market likes certainty. There's a new president. That's going to be the president. Stocks go up. I'm curious, tell us a little bit about what you think the impact of a Trump election will be, but then also more broadly, is this going to be like one of those elections that bucks that trend? Where no matter if it's Trump or if it's Kamala, because we all know big portion of the business community is in favor of Trump and probably betting that he's going to win with their investments. If it's Kamala, do they end up pulling out of the market? So could we end up seeing a very different result than we've seen in previous elections?
Yeah, and I'd say especially just getting back from a few weeks in Asia, on the investor stuff. I mean, that's always like a top 2 or 3 question. Look, we view it pretty simplistically where Trump gets in. If he gets in, it is very negative for the AI trade initially. Semis, tariffs, retaliatory for Apple, Tesla. JD Vance likely keeps Khan in, right, from an antitrust perspective. I think the view is Harris gets elected despite all the sort of antics. I think Khan's out, so which would be bullish for tech from an FTC perspective. So Alec, no doubt, I don't. When you said the biggest risk to the market from a tech trade, it's not like inflation, earnings, demand. To me, it's really Trump gets in. As Stephanie talked about, that jolts the trade because of the fear what's ahead.
And
Right.
I would say this. So just be careful and that's why you want to look for opportunity, because if Trump gets in and you get a mixed Congress, he's not going to be able to get as much as he wants to get done. If you have a red or a blue sweep, that's problematic for the overall markets just in general. So that's why it's more Congress in my mind. And then I would just simply say, I do not want to get into politics, but I would say this: whoever gets in, they are both spenders. They just spend it differently. So if you think that we are going to address the deficit, which is another big question when I talk to clients, as are we ever going to fix this thing? I don't think you're going to fix it for quite some time. I think my 17-year-old and our 17-year-olds are going to probably have to deal with it later down the road because we kicked the can. But for sure, tariffs are a headline risk, but watch the mix to see exactly if that's an opportunity or not. I think if it's a mix, it is an opportunity down the road, long term.
And the split, nothing gets done in the Beltway, which is bullish.
That's right.
Let's just pause there and talk about that, because it's so interesting to me that the market just doesn't want the government to operate. I mean, you would think it would be the opposite, right? Why is that good for markets? And is it short-sighted?
The market doesn't like surprise. The market doesn't like to. We do climb a wall of worry on a lot of things, but we always climb a wall of worry. In fact, I worry when we don't worry because that means we're complacent. But if you have a split Congress and not a lot gets done, it's gridlock. There's only a few things that the president can really address. Now, tariffs are one of them for sure, but you do need approval, and you do need and a process has to be put in place. He'll also be able to deal with immigration a little bit more and that sort of thing. So there are things that can get done, but for the most part, overarching, sweeping changes will be very, very difficult to get done. And that's what the market likes, because if it is a sweep, then we have no idea what's going on. We have no idea what's going to get passed.
Yeah. Okay, last thing about this. Let's say we do end up in some sort of trade war. We've seen China be quite aggressive in the seas, especially around Taiwan. And there's some fears, maybe, that there could be a blockade there. I mean, obviously, that could go even further to a takeover. But um, what do we think about that in terms of what would happen actually to the U.S. economy if that situation played out? And is that a risk that people should be thinking about?
Yeah, I mean, I just come back from Taiwan and the area. I think there's a view that that's just very low likelihood that that's going to happen. Now, look, in Hong
Right.
Kong, you definitely sense some seat changes in terms of what we see, but look, we're always going to have these sort of, as Stephanie talks about a lot, like black swan tail event. I just continue to view it as just a very low possibility. But I get it's a risk, and if that happens, it definitely becomes a little more pronounced.
What happens is also business capex and investments freezes, and consumers go into hiding because we just don't know.
Right.
If something were to happen, it depends on how severe it is. It depends on the circumstances, the
Yeah.
situation, how long does it last, what does it lead to? So there's a lot of questions. But that's why businesses will all of a sudden say, gonna cut back my spending, and consumers are going to say, I don't really know what's going to happen. So maybe I'm not going to go to the mall, or I'm not going to go out to the restaurant, or certainly not going to go traveling internationally. That
Right.
is, I think, a short-term view, but we just don't know.
Hmm.
And it's like so hard. Like I don't know about you guys, but I find it very hard to try to invest on politics, number one, and any kind of war, number two. I kind of like to look at, just from an investment point of view. I don't mean to be insensitive, but when things like that happen
100%.
and stocks pull back hard, I'm trying to think 3, 5 years down the road. I know you guys are too. And it's like, okay, can I get Apple back to 160? Can I, wow,
Yeah.
I would love to get Apple back to 160, right?
No, I wouldn't like it, but I get your point.
From an investor, you know what? You have to buy low and sell high.
Yeah.
Most people say they do, and they don't. They buy high and sell low because it's hard to do.
I mean, Alex, I will tell you, Alex, I'll tell you a story. Like, I remember when Meta, and then you like a lot of people like revisions, like, oh, I like the stock now. You're like, what? You hated to be Stephanie? We're sitting there, and Meta legitimately at its low, the day like the disaster, maybe the stock's at 85. And I mean, it will always be like a vivid memory where you're like, there's just there's just no way that you don't make big money here. You pound the tape. I
Yeah.
always remember that in terms of that day.
That's sweet. Hard
Exactly.
to do, but thank you. I wasn't my only buy, unfortunately.
Of course.
But that's how you do. But that's how you actually make money. It's like you try to dollar cost average. Kramer used to tell me, and I worked for him for 7 years. You want to buy a stock, and then you kind of sort of hope, if you really have conviction, you hope it goes down, so that you can keep buying a little bit, because you don't know when it might reverse. But Meta was really just a wow. Talk about everybody got on the same boat. Wow, they got really negative on that.
Right. Yeah. Well, I do hope that we come out of this cycle and we're in good shape. But I'm planning to visit Beijing for the first time in January. So fingers crossed, the flights are booked. Let's just everybody chill till February, and I got to go see the wall, and then we can figure it out after that.
So you're saying wait for like if Trump gets in tariffs, you got to wait till you fly back to then at least we
Do
could
whatever
start
you
it.
need to. We're
Exactly.
going right before inauguration of whoever it is, because we're going to get a new president. Everybody has to relax until then, and then duke it out. I got to go see the wall. All right, we're going to talk about Nvidia and some other companies on the other side of this break. We'll be back right after this. And we're back here on Big Technology Podcast with Dan Ives, the Managing Director of Equity Research at Wedbush Securities, and Stephanie Link, the Chief Investment Strategist and Portfolio Manager at Hightower Advisors. Well, we have 20 minutes and so many companies to talk about. Why does it always happen like this? So let's just quickly go through Nvidia, Amazon, and Google and see where we get after that. Nvidia, big new chip, the Blackwell chip, is apparently selling like crazy, despite the fact that so many folks in the tech world have said you can custom create chips to do the AI workload, and you won't need to spend 40 grand on Nvidia chips. Dan, what do you think about the state of this Blackwell chip, and why is it selling so well despite all these claims that people could do what
Yeah.
Nvidia did better?
And those claims, I mean, I'm going to play in the NBA this season. I mean, the point is
No, I'm
like,
pushing back on this though. They are
and
custom
just, I
built.
mean, my view is
Yes,
just,
but
no, exactly. You're going to put, it's like, we, in Asia, it was 15-1 demand to supply.
really, for
4
Nvidia,
months ago, it was 12-1. So I just view it as like, you're probably going to be looking at $6 of earnings for Nvidia. And then like, what you put a 30 multiple on it. I mean, the point is like, you could easily start to get to a stock with a 2 in front of it.
Mhm.
which would put the valuation at.
I mean, I think you're looking at $4 trillion market cap, like in
Yeah.
the next 3 to 6 months. I mean, that's,
Mhm.
I think them and Apple, they battle it out for that finish line to get the 4 trillion.
If you're right on $6, the stock's trading at 24 times.
I think I think most investors that we talk to, it's like, numbers are sandbag.
Yeah.
You look at, four more $2 billion beats. Blackwell, they said billions. It's probably going to be 15-20x that. I mean, you start to run through some numbers.
Yeah.
$6 of earnings is not ridiculous. It's actually somewhere maybe like within the baseline.
Stephanie, are you concerned about all this with all this AI talk, that people are spending a lot of money, investing a lot of money in the AI trade, but the return on investment is not quite clear yet in terms of what you're getting for all this money?
Yeah, and it's a really good question. It's hard to answer, but I would say this. I feel, and I don't own Nvidia, but I own Broadcom and I own Lam Research, and I got ways I'm playing it, so it's fine. I think there's a lot of ways you can play it. Semis kind of seem to be the ones that are monetizing it the fastest so far. But what I would say is, because a lot of people compare this to the dot-com bubble, and we didn't have earnings in the dot-com bubble. We were valuing companies on eyeballs, which is absurd, in retrospect. But we actually have real earnings. And if Dan is right and earnings continue to go higher, then these stocks aren't nearly as expensive. Are they over-owned? Yes, they are. There is no question.
Mhm.
I was buying Broadcom when it traded at 14 times forward estimates. It's now at 27 times, which makes me a little worried. Well, it's also changed its stripes a bit in terms of software and diversification, and they have the AI, and they're the number two player. So I think that's important, number one. Number two, if we didn't see these hyperscalers spending as much money as they are spending on this effort, then I would be worried. But you've got the big hyperscalers that are actually going to invest $241 billion this year. That's up 41%. And next year up $278 billion.
Mhm.
That's up 17%. So that's real money. Are they double ordering? Of course they are. Of course they are. They can't get anything. So at some point, we may have to just recalibrate. But for the time being, the demand is there. The earnings trajectory for all of these companies is there. It's higher. And so, do you want to put all your eggs in Nvidia? I don't think so. I think there's a whole ton of ways you play AI. And by the way, it goes way over the gamut into the industrial space, right? If you believe in AI, you need data centers. And that's fine. We all understand that.
But
If you need double the data centers, triple the data centers, you need power. That's why everyone's talking about natural gas and nuclear power and wind and all la la la. So that's a totally different way of playing it. However, the grid has not been invested in incrementally in the last 50 years. And so for all of this to work, for AI to work, you need to invest in the grid. And that we are going to spend $4 trillion between now and 2050 on the whole energy part of the cycle. So that's another way of playing. I think you just spread, this is pun intended, spread your chips around in various different stocks.
But all this money that's being spent and all of these earnings that we're talking about, these are in the component parts. It's in the chips. It's in the servers. It's in the power. It's in the Amazons and the Microsofts that are selling this compute to companies. The problem is that companies haven't quite figured out what to do with it. And maybe that's controversial, but if you think about the way that OpenAI, we just took a look at OpenAI's financials on a recent episode, and they expect ChatGPT, not the API, to be the main driver of revenue for them in the future. So I mean, maybe
I
this is
would,
provocative,
yeah.
but Dan,
No, I
I'm
like
curious
it.
what
I
you
like it.
think.
It's provocative. I love it, man. It's
Folks, for
there.
those who are
No,
listening, I just saw quite a look from Dan being very mad at me right now, but I have
no,
to ask the
no,
questions.
no. I love it. That's why I love the way you do it. But the one thing I'd say is look at the Messi of AI Palantir. I mean, that is the perfect example in terms of use cases on enterprise that are exploding. Look at what McDermott's doing at ServiceNow. I mean, so I think for the most part, I think I it's still in front of us, but the use cases are happening. I mean, we talk to customers all the time, and that to me is what makes us the most bullish when we see the use cases exploding.
Okay. And what do we
I
think
think it's going
about?
to take a long time for us to really get comfortable with the monetization of all of this. I don't think, though, if we just wait for that to happen, I think you're going to lose a lot of money in the meantime, where you're going to miss out on a lot of things. And I'm not saying, again, own everything in Nvidia. I'm not. I'm saying find some spots where you want to have exposure. And oh, by the way, the other industry that's exploding higher is utilities for the same
Yeah.
reason as industrials, the same reason as AI. So there are plenty of ways to play this. If we wait for these companies to show supreme results, I think you're going to miss some. I think you are.
Because to some extent, it's like you focus on trying to draft Brady's 6th round at Michigan 2000 draft,
Yeah.
not 10 years later, right? Like, in other words, like a few Super Bowls and already the GOAT.
I mean,
That's the hard part, right? It's like it's making those bets.
I got Aaron Rodgers, like what has that got me
Yeah,
here? Oh,
nothing.
so
And
sorry, but there's
so
that.
many draft picks don't pan out if we're
But
going
again,
to
Aaron
beat
Rodgers
the NFL.
coming out of Cal into
No,
Green Bay. Now
Yeah,
more legacy, let's call like a Dell or an HP.
that's
But
right.
right.
there was a point,
Oh, for sure. Yeah.
Yeah. Okay, let's go to Amazon. So Amazon cultural issues there. Don't we?
Uh,
We think there's some cultural issues. They're trading cheaper than most folks. We had Josh Brown on last week. Said there's no coherent story on it, which I think is right. Stephanie, you just bought a bunch of Amazon. And by the
I
way, I
did.
think it's a good point in the show to say this is just for informational purposes, not investment advice. But I'm
Yes.
curious what you see in Amazon that others don't.
So it goes back to sentiment. So since Amazon reported last quarter, it's up 1.9%. The NASDAQ is up 6.9%. All of a sudden, we have some downgrades, some lowering of numbers. There's now cultural issues that came out of left field. That Jassy went from hero to dud. He doesn't know what he's doing. He's overspending. Now, I look, a lot of the concerns have to do with the fact they are spending a lot, especially on this remote broadband, which I would love to get both of your opinions on if you think that really makes sense. But if I look at the numbers in terms of what they're spending on remote broadband, satellite internet is what I'm talking about. It's going to be like $338 million in the second half of this year, and it'll be about $1 billion next year. That's less than 0.4% of OPEX. They are going to generate free cash flow this year of $48 billion. So let's just put that to bed right there. Now, I think retail is certainly not struggling, but certainly not doing barn burner numbers. But I think it's because you have an uneven consumer. You have the haves and the have-nots. You have Walmart, Costco, Target, Amazon, the haves, and you got dollar stores and you got department stores, the have-nots. You won't want to touch those. I don't care how cheap they get. So if I don't think they're going to spend crazy, and I think they're going to spend, but it's not going to be that crazy. And I think retail is going to hold in, and the margin side, North American margins can get to like upper single digits, which I think they can. That's okay. But I think the real story of Amazon is AWS growing 19-20% with 33% margins. You have advertising growing up low double digits with 50% margins, and collectively those two businesses are right now they are about 24% of total revenue. That's going to get to 31% by the end of this decade. And I know a lot can happen between now and the end of the decade, but just hear me out. Like, you're going with your two highest margin businesses expanding as a percentage of the total pie. And I think you're going to see a CAGR of about 20% for the next 5 years at this company versus Meta at 13% and versus Google at 12.8%. So I think the growth is there. The expectations are really low. This stock always goes from hated to loved to hated to loved. And right
Yes.
now it's hated.
So on the advertising thing, I'd like to hear both of you chime in on this. And
First
then,
of all, I just want to say
yeah,
that was if she had a mic, just drop it. That was a drop the mic type. I mean, that was like it's hard. It's actually hard to follow that. That was a little. I almost shed a tear in terms of how good that was right there.
Dan, you're so funny.
amazing, Dan.
I learned it from you, my friend. Come on.
That was unbelievable.
Okay, but let's talk about this advertising side of things, because it seems to me like Amazon has built an advertising business out of nowhere. And
Yeah.
it's like one of the most successful, like if it was a standalone business, it would be one of the most successful ad businesses. It's contributing so much to Amazon profit. I mean, how important is this ad business and how do they do it? Stephanie?
Oh, okay. So how do they do it? Well, I mean, I think number one, a lot of it is AI behind the scenes. And I think it is, a lot of the technology that they've put in place. I think they have, talk about eyeballs. We know how many eyeballs they have in a lot of their different businesses. And so I think there's a couple of ways that you can win, to be honest with you. So advertising is still very small and it's very cyclical. So let's not forget that. Let's
Right.
remember that during COVID, it fell dramatically, over 50%. Everybody's advertising business did. But if you believe, like I believe, the US economy is actually a little bit stronger than expected and will stay a little bit stronger than expected, clearly this is where the eyeballs are going to. They're not going to legacy TV. I mean, we haven't even talked about, kind of all the prime and NFL and all the other things that are happening. But there's so many ways to win on the advertising front into a strong economy. And I think maybe even if we do slow, maybe we get back to 1.5% growth in GDP. Maybe you'll see a slowdown, but I think some of these other businesses, they're getting so entrenched with people. And so that's why I think
Right.
the business can grow. I mean, margins are crazy town at 50%.
Yeah,
Dan?
Alex, I would just add this. First of all, Jassy, in my opinion, it's a top 3 or 4 individual in the world that understands cloud. Okay.
Yes.
So anyone
I would
that's
hope
saying
so.
like
I mean, he
best
ran
days rearview
AWS,
mirror,
built it from the ground up. So
build it from ground up. I mean, so the point is, Jassy plays chess, others checkers in terms of overall AWS and cloud. To Stephanie's advertising, Street's given no credit here. And I think incrementally, this is something that could actually, as a percent of rev, really start to increase in the model. The AI
right.
story,
But
of
on
course,
that, yeah, go ahead. Go ahead. Finish.
and
And
the AI story, given no credit, to me, risk reward here, risk reward. I mean, I think there's a stock that could be up 25, 30%, maybe call it 5% type down. The risk reward here is a table pounder, in our opinion. And I think New York City cab drivers bearish on Amazon relative to large cap tech.
Well, it is
yeah,
trading cheaper than Apple. It's at 32
Yep.
times forward, and
Mm.
Apple's at 35 times. So
Yep.
that's crazy. That to me was crazy. And I don't
It's a
really
little
look,
crazy. It's a little crazy town.
I don't
Yeah.
really look at it on a PE basis, because if I did, I would never buy it because it would be too expensive for me. But if you look at EBITDA, it's traded at about 14 times. The average long term is almost 18 times. So yeah, I mean, I think it's you can get your arms around it. I might be wrong. It might not be a great quarter, but I do think the next 6 months, 12 months are going to be good for them.
And then on the ad side, Dan, just to you, how much does data, the fact that Amazon has this like unbelievable treasure trove of retail data,
That's
play
the
in?
gold. That's the goal. Like, I mean, it just goes back to like, no one ever gave Apple any credit for services. Look where we are now.
Yeah.
Mm-hmm.
Amazon, it's gonna be the same thing, in my view.
Okay. All right. A couple minutes left. Let's talk quickly about this antitrust thing, which we touched on briefly, but I think antitrust is factoring more with big tech than I think it has in the past. I mean, in the past, I would kind of laugh at it, being like, they're never going to do anything. The government's weak. The companies are strong. But Google did just lose this antitrust case. And now the remedies include potentially a breakup. I don't know if it's going to go that far, but all of a sudden, antitrust matters a lot more than it did previously. And like, yes, the breakup might get the headlines, but this is going to meaningfully change the way companies like Google, for instance, which lost the case, do business. Don't you think, Dan?
I mean, just as someone, look, DOJ clearly, our trophy case, they won in terms of that case. They got sea legs. But I mean, the precedent's there with Microsoft. I mean, in covering Microsoft back then, ultimately they won that on appeal. There's going to be business model tweaks. But my view is this is not going to dramatically change the business model of Google, because then eventually it's going to be Apple also and others coming down the pike. This is going to be fought out in court for many years, and I think it will be settlements and business model tweaks, not massive changes.
Dan, how long did Microsoft's the big case that they had? How long did that?
12 years.
Yeah, right. I was going to say. I thought it was
About
8
12
years.
years.
12 years. I mean, this is going to take such a long time. Who the heck even knows who's going to be at the DOJ and the EU, and you have no idea how it's all going to play out. There's no question it's an overhang. But I feel like we said this on Microsoft, and look what Microsoft has done over the years.
Yeah, they figured it out. But
Yeah,
the other side of it is that.
But I do agree with you, Alex. It is becoming. It's not just EU cup of coffee.
Right.
It is more legit because DOJ.
Yeah. And all right, I'm just going to use one analogy. It's not the same thing or anywhere close. But when Elon signed the deal to buy Twitter and the courts forced him to go ahead and make that purchase, or they were going to, and he just said, okay, I'm going to do it despite the lawsuit. It seemed up until that moment that big tech was sort of impervious to the law. And now it's starting to seem like governments are going. I mean, the Europe thing is becoming big. It's changing the way these companies operate. And then the U.S. government is also winning cases against them. It seems to me like it's a new chapter.
I don't know. Maybe if Google were to spin off some of their businesses, that actually the sum of the parts could be more worth.
Oh, hundreds. I know.
Yeah.
Right?
Everybody might be happy.
Even if they spin out and the growth isn't the same, which I totally wouldn't buy, because I think spin outs work brilliantly. Just ask General Electric. But if they spin it out, and then you don't have that overhang, and then you have managements that are focused solely on those businesses, and growth can actually accelerate just on that alone.
Yeah.
Dan, Stephanie, thank you so much for coming on, and I can't wait to see you both in Savannah.
Thank you, guys.
Can't wait. Thank you.
Okay, see you.
Thanks so much.
Okay, thanks everybody for listening. We'll see you next time on Big Technology Podcast.